Welcome to Simple Uptrends. On this channel, we will take a look at anything related to finance, but specifically investing. So if that sounds like something you want to be a part of, please consider subscribing and showing some support to the channel. Now, let's get on to today's topic, which is 2 Canadian stocks you must buy that happen to be under 100 Canadian dollars. The very first stock would be WELL Health Technologies, ticker symbol WELL. This stock has grown around 20% over the past month alone, peaking at $5.29 per share. WELL has dipped a bit as of this recording, closing at a price of $5.20, so hop on the bandwagon before it soars to completely new heights. WELL Health is my personal favorite telehealth stock for a multitude of reasons. I'm willing to hold on to this stock despite the volatility of the current market because I believe in the long-term potential for this company and that telehealth will become simply enormous. You may be wondering, what is telehealth? Telehealth is the use of devices such as your own phones and computers to access healthcare services remotely and manage your healthcare. As the pandemic continues to affect the world, people become more paranoid about health facilities such as hospitals and clinics. Telehealth allows you to access the same medical attention from the comfort of your own house. Not only that, but it allows electronic medical records. They're developing a software that helps record patient data instead of the traditional pen and paper method. This saves a lot of space and allows more organization. Now let's take a look at the financials of WELL Health. As you can see, there's an exponential growth in the company's revenue. Although the earnings seem to be in the negatives, I strongly believe that these numbers will become positive because of the number of assets they're acquiring at such a fast pace. For example, here we can see that WELL acquired Divica, increasing its EMR footprint to more than 10,000 physicians across Canada and becoming the 3rd largest EMR service provider in Canada. Moving on to our second stock, this would be Toronto Dominion Bank, aka TD Bank, ticker symbol TD. Although all of the big 6 Canadian banks are valuable investments in my opinion, my favorite out of the 6 has to be TD Bank. This stock currently has a low share price because of how it's still recovering from the recent crash and how undervalued it is. TD Bank's stock price should soar in the upcoming future due to its expansion into the United States. The US branch was created through the merger of TD Bank North and Commerce Bank, and it now serves more than 6.5 million customers with a network of more than 1.2 thousand branches in the eastern United States. The bank is now a top 10 bank in North America and is the 26th largest bank in the world. Not only is this a valuable growth stock, but it is also a great dividend stock because it has a dividend yield of 5.8% and it has a long history of consistent payouts. Taking a very quick look at its financials, we can see that the revenue and earnings are quite consistently rising, with only a small dip in the recent second quarter because of the recent pandemic. Luckily, there are signs of improvement. TD and 5 other large lenders built up about $8.3 billion in reserves in the second quarter to brace for the bad loans emerging from the pandemic. The government is also providing relief efforts as Canadian banks are crucial to the Canadian economy. So to give a quick recap for this video, the stocks that I personally recommend would be WELL Health, ticker symbol WELL, and TD Bank, ticker symbol TD. Also, this goes without saying, but as a quick disclaimer, please do your own research thoroughly into these companies before you make an investment. So that wraps up my video today. Feel free to subscribe if this video has brought any value to you. I'll see you in the next one.